So you've got this trading idea, right? And it feels like it could be a real winner. Well, today we're going to roll up our sleeves and build the exact tool you need to test that idea before you risk a single dollar. We're building a powerful backtester, and we're going to do it from scratch using Python.
I mean, we've all been there. You're looking at the charts, and suddenly, bam, a flash of insight. You spot a pattern, a connection nobody else sees, an idea that feels like it could be huge.
But that's the big question, isn't it? You can't just throw your hard-earned money at an untested hunch. You need a safe way to see if your idea can actually fly. You need to test it in the real world, but, without the real-world risk. And that is exactly what a backtester does. It's basically your own personal time machine for the stock market. It's a virtual trading floor where you can take your strategy, run it against years and years of historical data, and get a solid verdict on how it would have done.
Okay, but let's be real. There are plenty of backtesting tools out there already. So why on earth would you go through the trouble of building one yourself? The answer is actually pretty compelling. And this is the classic dilemma, right? To build or not to build. Look, when you build it yourself, you gain this incredible, deep knowledge of how everything works. You get full ownership, total transparency, and you can customize every little detail. But on the flip side, it's not easy. It takes a ton of time, and you're responsible for keeping it running. It really comes down to what your personal goals are.
All right, so you've decided to dive in. You're going to build it. Awesome. But what's actually under the hood? Let's take a look at the blueprint for a really solid backtesting engine.
Pretty much everyone agrees that a great backtester has these 4 core parts. First, you need a data manager to handle all the historical info. Then, you've got the strategy logic. That's the brain of the operation. Third, an execution engine that actually simulates the trades, including all the annoying costs. And finally, a performance module to crunch the numbers and tell you how you did. They all have to work together perfectly, like interlocking gears.
All right, now for the really cool part. This is where the magic happens. We're going to see how we take raw, boring data and turn it into something we can actually trade on, a signal. So everything begins here, with the basics. Just simple, clean, historical data. Think of it like a spreadsheet. You've got the date, the open, high, low, and close prices. This is our raw material. The clay we're going to mold.
And boom, this is the transformation. We apply our strategy's logic to that raw data to create new columns, new indicators. In this case, it's a couple of simple moving averages. And when those averages cross in just the right way, a signal is generated. A 1 tells our engine, hey, it's time to buy. And a -1 means sell. Simple, but so powerful. So we've got our data, we've got our signals. Now it's time to fire up the engine and see what happens. This is the moment of truth. For our little test drive here, we're going to use a classic example, a simple moving average crossover strategy. And we're going to apply it to Netflix stock for the entire year of 2023. Let's see how it did. And there you have it, a whopping 39.99% total return, almost 40%. Now that is the kind of headline number that makes all the late nights spent coding feel totally worth it. It's a fantastic result. But hold on, that big number is great, but any pro will tell you, you have to look deeper. The total return doesn't tell the whole story. We also need to see stuff like the Sharpe Ratio. That tells us how much return we got for the amount of risk we took on. And we definitely need to see the maximum drawdown, which was the biggest single drop our portfolio took. In this case, about 15%. Looking at all these numbers together gives us a much clearer picture.
Okay, so a 40% return sounds amazing, maybe almost too good to be true. And that brings us to what is possibly the most important part of this whole process, avoiding the traps that can make your results totally fake and dangerously misleading.
You know, there is a line from one of our sources, Lux Algo, that just nails it. It says, a backtest can be misleading unless the engine models market realities. A backtester is only as good as its connection to the real world. If you ignore that, your results are basically just a fantasy.
And these are the big ones, the absolute deal breakers. Think of them as the 4 horsemen of a busted backtest. You've got look-ahead bias, where you accidentally use info from the future. Overfitting, where your strategy is too perfect for the past and useless for the future. Survivorship bias, where you forget about all the stocks that went bankrupt. And maybe the biggest sin of all, ignoring real-world costs like commissions and slippage. Any one of these can wreck your results. So if you take away just one thing from all this, please let it be this. Market realism is absolutely non-negotiable.
A good backtester isn't there to make you feel good. It's there to simulate the messy, complicated, and often expensive reality of live trading.
So you see, building a backtester really is a journey, isn't it? You start with that spark, that million-dollar idea. You laid out the blueprint piece by piece. You run the test, and you end up with this incredible, powerful tool that gives you real data-driven insights. And that leaves us right here with the final, most important question. The engine's built, it's beautiful, it's realistic, the tool is ready, but now the real work begins. Is your strategy actually a winner?